Uncensored, the truth about money.
Hello, good day, everybody. How's everyone doing? I hope everyone is good. Thank you so much for joining us again. Welcome to the podcast, Uncensored, the truth about money. We are on episode number 4, right? So today we're talking about a very interesting topic. I mean, we're always talking about something interesting, but today this is quite, for a few people, in fact for almost everyone, this is one of those big steps that you make in life, you know, and it's such a great achievement when you are able to finally reach that stage, you know. Today we are talking about home loans, right? We're talking about house bonds, home loan, everything that you need to know. Hopefully we'll cover it in this episode. Other than that, if we don't, then you know what you need to do. You need to make your own research, as we always say, you know, you can't trust us. So let's get right into it.
Let's do it.
Sure. So my first question is, I've always asked myself this question, you know, but I don't know why I've never really done my research on it. So so my question is there a difference between a mortgage bond and a home loan? Is there a difference there? Sure. Sorry about that.
Yeah. So you're saying?
No, I'm saying, is there a difference there, or it's just basically the same thing, just using different terms?
Yeah, it's pretty much the same thing. It's just the terminology that's different. Although when you do search online, right, on different websites, there's different meanings for both words. So what they say for a mortgage, so a mortgage bond is registered at the deeds office as a security to the loan. So that's the the house now that's being registered at the deeds office, right? And then with the home loan, so this is now the funds that the bank is lending you. So once the bond is registered at the deeds office, the bank will pay out the loan amount, usually into the conveyor's trust account, and then only will it be transferred through to the buyer. So it's pretty much the same thing. There's not really much of a difference between the two, eh?
Yeah. Okay. So what's the wisest thing to do? To first go to a financial institution and see how much you qualify for, or go house hunting first and then apply?
All right. So obviously now this is the option if you haven't won the lotto and you don't have the lump sum.
Of course, yeah,
house cash.
definitely.
Right. So my best advice is go through the process. So go for, let's say for example, you're in the market to buy a house. My thing is this, right? Go through the whole process in terms of, you know, the purchasing of a property. So go identify that house or that apartment or that farm that you want. All right. Get that offer to purchase from the agent. Submit that offer to purchase as well as like supporting documents through to your banks or finance institutions. And then they'll basically tell you whether you qualify or you don't qualify. Some of them will tell you that you qualify for 90% and you need like 10% deposit. Others will tell you that you qualify 100%. Some will say that you don't qualify, you know, outrightly. And then, you know, with certain finance institutions, they actually give you the reasons. So some of them will tell you, you know, you need to go fix your credit score, or you need to go fix your affordability. So my thing is, rather go through the whole process. At least you will be familiar with, you know, the A to Z of purchasing a property. You know, from meeting, you know, the agent to actually applying for the bond, and, you know, getting the results at the end. So my take is this: you know, go for that property, apply for it, and, you know, Bob's your uncle.
But then, let's say now I like there's a certain property that I like and I love it, right? And then obviously I go see it, I view it, and then go to the bank, and then I get declined. You know how sore that will be, man.
But you know, prior to that, right? I think just a quick exercise that you can do. So there's multiple websites that you can visit. They can actually tell you according to how much you get paid on a monthly basis. So if you get 30,000 rand, 40,000 rand a month, certain websites are able to basically tell you how much you qualify for, or pre-approval, if you can put it that way, in terms of a home loan. And then if, let's say, you earn 30,000 Rand and they tell you, okay, Junior, you actually pre-qualify for a 1.2, 1.3 million Rand house. So what Junior can do is that Junior can go out and actually go view properties around that bracket. And, as I said, that go through the whole procedure of applying for that bond.
As you're talking, I'm remembering something that I see a lot on these property websites, like about Property 24. So you would obviously see the property, and you see the how much the property is, right? And then
100%.
And then there's a drop down arrow there that you click, and then it tells you your bond and gives you that information. And then it says, so it would say monthly installment 5,000 Rand. And then then they say minimum salary 20,000 Rand. I've seen that a lot. How important is that important to take note of, or
Yeah, so that's very important to take note of. So what these websites are actually doing now is that they actually giving you more information as to your pre-approval, your pre-approvals. So they're saying to you, okay, Junior, now you're seeing this house, you're going on Property 24, you're viewing apartments, and let's say you click on an apartment that costs 1.2. So they actually give you now a breakdown, although that breakdown, it's not an accurate, or it's not a 100% guaranteed amount that you pay every single month, but it gives you like a yardstick of how much you basically pay on a monthly basis for the property. And as you mentioned, that they actually tell you how much you need to earn on a monthly basis to qualify for that house. So as I'm saying, there's, like, as you put earlier on in the intro, that people should actually go out there and do their research, and you never know, man. And in terms of purchasing a property.
Yeah, but I guess my question is that is that realistic though? The fact that a property on your monthly premiums, or what you pay monthly, is 5,000 Rands, but they want your minimum gross or salary to be 20,000. Because I've seen that, and it always like, I'm like, what's happening here? Why is there's a huge difference?
Yeah, so that's what I'm saying, that I get you. So what happens in the financial institution, there's what we call a needs analysis. So ultimately, they don't want to indebt you. So they don't want to, give you that bond, but leave you worse off. So yes, you can get paid, let's say 20,000 Rand, but all they require is 5,000 Rand on a monthly basis, because there's other fees which we'll touch up on within this episode or episodes to come.
Sure.
Fees that we should pay. So by them saying that Junior needs to earn 20,000 to pay that 5,000 Rand, it basically means that they've done their analysis, in hindsight, so that Junior can actually, still be able to afford, other extra costs apart from that bond amount.
Yeah. All right. So which brings me to my next question. What is a bond originator?
All right, so that's a nice question. So bond originators. So what happens is that when you apply for, when you go view that property and you meet that sales agent and you submit all your documentations. So what bond originators do is that they actually do the homework for you. So they are affiliated to various banks or financial institutions. So they submit all your documents to all these places, and they try get the best competitive rate for you. They try get the best home loan deal for you throughout all these people. And the nice thing about that is that you don't need to submit, various, multiple documents. You just basically submit all the documents that the agent wants. The agent, then they speak to the bond originators on their side. The bond originator then speaks to the various financial institutions. Then the financial institutions basically come back with their answers, and they get to pick the best out of all of them.
So for you to have this, you can ask the person or the agent that's helping you to buy that property.
Yeah, so most agents are linked to bond originators. So
Okay.
what they'll do is that they'll ask you, say, Junior, all right, so you're applying for this house here. You're applying for a bond for this house, okay? Are you gonna go on your own route, or do you want us, to facilitate the whole process of getting a bond for you? Then they'll go through to their bond originators, and their bond originators will then, try and get the best deal for Junior.
Okay. Cool. Do you then pay for these people? Is there a fee that you pay?
The nice thing about that, yeah, so the nice thing about that is that there's actually, you as Junior, the buyer now, you don't actually pay a fee, for to use these services. What happens is that the banks pay them a certain commission, for getting Junior to use, let's say Standard Bank as Junior's, home loan institution. So they basically, are affiliated to all these banks. And obviously, if they get a certain, rate at, let's say, Nedbank will then give them a small fee for bringing business in. So that's why they are the best people to go to when applying for a bond, because obviously they have a good relationship with certain banks, and those banks are actually looking for business. So that's why they'll give Junior that best rate, so that the bond originator can choose, let's say, Standard Bank and be your Nedbank, as the best, home loan vehicle for Junior.
Ah, sweet. What is an excess bond?
So basically, an excess bond is a type of home loan that allows like borrowers who have paid like extra money into their bond withdraw the extra money, should they need it. So this means that if, let's say, a homeowner has been paying, let's say, 6,000 Rand as opposed to 5,000 Rand, that extra amount can be put aside into your excess bond, which you apply for, and you can use that excess amount, on rainy days.
So, what is a bond cover, and what are the benefits of having a bond cover?
All right. So what a bond cover essentially is, it's a risk policy that pays out in the event of death, disability, or retrenchment. So now, if you now go to the bank and take out R1 million bond, what the banks do is that they actually open a bond cover for you, or a life cover.
Okay.
But there's no underwriting. So they'll charge you like, 1,000 Rand, 900 Rand for that bond cover, as opposed to you going to, let's say, Liberty, Sanlam, or any other insurance institution and getting a life cover where they do underwrite you. You can actually save up a lot and actually pay like 400 Rand or 300 Rand, if that may be, for the same amount of cover. So the benefits of it, actually, I recommend that, whoever does go and get a bond, it's important for you to have a bond cover, because there's families where, when the breadwinner or the person who is actually paying for the bond passes away, some families, the house gets taken away because the amount or the bond still needs to get paid for, but now there's no breadwinner or there's no income, for the family that's left. So now, if you do have a bond cover, at least if you pass away or get disabled or get retrenched, you guaranteed that that amount that you took out as a bond will be settled in the event of, an unforeseen circumstance.
So okay, I hear you. So now, what do you think is the best, or what do you recommend? Having a bond cover, or taking out a life cover with like your Liberty or Sundam? Because the way you explained it is that going that route, it's much more cheaper. Yeah.
Yeah, it's way cheaper. The reason why I'm saying that is because of the underwriting. So if you take out a bond cover with the bank, there are no underwritings. So they won't come and test your medicals or check what your weight or your medical history. So they don't do that when they give you a bond cover through the bank. But now, if you go through your Liberty, Sanlam, or Discoveries, they actually go through your medicals, and they actually check, Junior's risk tolerance or risk appetite, and then they actually give you a much better premium as opposed to a bond cover. So my take is rather go get a life cover. If you know that your medicals are fine, rather get a life cover and see that life cover to the bond, and it's much more better, and you can save actually a lot from doing that.
All right, sweet. So, Pratamza, unfortunately, we're out of time. But before we go, quickly, bond installment versus bond term. What's your take on that?
So, if I have a longer term, I'll essentially be paying lower for a bond installment. So, using that 5,000 Rand example that you mentioned earlier on,
Sure.
If my bond term is 20 years and I'm paying 5,000 Rand, if I decide to increase my bond term to 30 years, I can actually, pay a bit less as opposed to paying that 5,000 Rand, because now I'm stretching my bond amount, over a period of 30 years as opposed to 20 years.
I didn't know that. I thought the maximum number of years to pay off your bond is only limited to 20 years. I didn't know you could possibly stretch it to 30.
Yeah, so what banks have done, they've actually, what used to happen before is that a lot of people were not qualifying because of the 20 years, right? And now they found out that if they actually stretch the term according to your age as well, if they stretch the term to 30 years, junior has more chances of being approved for that bond because of affordability now. So if I was paying 5,000 Rand, now, with the 30-year term, I can pay 4,000 Rand or 4.5 if that may be.
Sure. All right, Pratamza, thank you so much. We are out of time, but I have a lot of questions for you, and we didn't have the time to get through them. So we're obviously going to have a part 2 of this. Once again, we apologize about the sound because we're doing it online, so... Oh, and one last thing, please, guys, follow us on our Instagram page, uncensored_the truth about money. From our side, we're out. Pratamza, thank you so much. Is there anything you would like to say before we go?
My take is this, do your homework, check your affordability, check if you can apply, and if you can apply, go ahead and buy that house. Now is the best time to buy, the property. Interest rates are favoring, buyers now. So, but yeah, we'll touch up on that more in the episodes to come. But other than that, thanks for hosting me.